Hi everyone, and welcome to season 2 of Entre-Elles. I'm your host, Tombany, and I am beyond excited to have you back on this podcast dedicated to women of the world and their professional journey. Thank you all for your messages, emails, and feedback during this break that ended up being slightly longer than expected. I can't wait to share new inspiring stories with you and all the great content that I've been working on to support you in your own projects. As always, if you enjoyed this episode, make sure to subscribe, like, and share it around you. You can also DM me on social media at Entre-Elles Podcast. Now, let's talk about my guest. This week, I'm taking you to Lagos, Nigeria. Adesuwa Okunbo-Rhodes is an impressive young woman educated between Lagos and London. She is the founding partner and CEO at Aruwa Capital Management. Her goal is to change the face of investing in Africa. And in a minute, you'll see why she's considered by many to be a rising star. Here is our conversation recorded remotely between London and Lagos. Hi, Adesuwa. Thank you for joining me in this new episode of Entre-Elles.
Thank you for having me, Tombany.
Before we dive into the business case for investing in women-led businesses and Africa as an investment opportunity, let's talk about your journey. Where were you born and where did you grow up?
I was actually born in Lagos. So born in Lagos, primary school in Lagos, but moved to London when I was 11 to go to school. So I went to boarding school in England, in a place called Ramsgate in Kent. Then did my university in Bristol as well, studying economics. And during my time at university is really when I started to enter into the world of investment banking. So had a couple of jobs, had a job with Lehman Brothers, had a job with JP Morgan. And shortly after I graduated, I then had a job with an impact fund investing in Africa. And that's really where my kind of passion for investing, my realization that I wanted to do this over the long term, that's really where that came. So did a couple of investments in Anglophone Africa, one specifically in Uganda, which was a local drugs manufacturer. And it was really from that investment that I did, because I also personally invested in that one. It was also through that investment that I started to realize the African opportunity of being able to make money, but also have significant positive social impact in terms of improved healthcare, job creation, poverty alleviation. So when I was going back to JP Morgan, I always knew at the back of my mind that I would want to do something back home in Nigeria where I could use my skills and track record to invest, make money, do it profitably, but also, impact the society in a positive way. So, sitting at my desk at JP Morgan, I was at JP Morgan for just under 4 years in investment banking and in leverage finance. Completed a number of transactions, over $5.6 billion of transactions. And I got headhunted by a European private equity fund that wanted me to help them run their Africa business. It was a great opportunity for me, jumped at that. It was a chance to have the opportunity to come back home to Nigeria, but also sit under an existing platform that have, successfully raised and deployed capital on behalf of institutional investors. So I did that for about 5 years as the managing partner and the co-founder of that business. And it was really during that time that I started to see the significant opportunity in Nigeria and across Africa in growth equity investments, where we could provide capital to businesses that are starved of capital from other private equity funds, starved of capital from local banks, and be able to generate returns, but also, positively impact the society in terms of job creation, in terms of access to essential goods and services, and so on. So I did that for about 5 years, but then I took the decision to launch out on my own and start Aruwa, because I didn't really see many African women-owned or led funds on the continent. There are less than 10 funds in the whole of the continent that have successfully raised capital in the last decade. and close their private equity funds. So that really spurred me to want to change the narrative by being the example and by being what I couldn't see. Because I think that the best way to close the gender funding gaps and the best way to change the narrative in women accessing capital is to have the examples and case studies that we can point to of what's happened when, African women and women in general have been, empowered with capital and have been capital allocators. Because I think as we become decision makers, as we become capital allocators, then there is a natural trickle down effect to women in our portfolio, whether that's women as consumers, whether that's women in our management teams, as founders, as entrepreneurs, women across boards, women in value chains. And as we do that, you've seen all the research from IFC, from McKinsey, from Harvard Business Review, that increased gender diversity improves profitability, reduces risk. So we really see that as a value driver of our fund and a very strong competitive advantage that I have as a woman allocating capital, because historically it's predominantly been men that have been allocating capital. So that their blind spots are my opportunity. And we see that as a very, very strong competitive advantage. And in addition, if you care about social impact and if you care about, poverty alleviation and increased access to healthcare and education on the continent, women are typically reinvesting 90% of their income into healthcare, into education, back into their children, back into their families. So we really see this strategy as having a significant multiplier effect on the communities, on the societies that we invest in. So that's really a little bit about my journey. It's, I've always been interested in finance, always been interested in investment banking, but my eyes really opened up to say, well, over and above just completing transactions, how can I use my interest, skill, track record to do something that I enjoy doing, but also be able to leave a legacy that my children will be proud of in the role that, I've been able to play in changing the financial ecosystem in Nigeria and across Africa for the better, where we're able to have a more inclusive private equity industry, one that is representative of the population that we live in, and one where women are able to kind of reach their full potential.
Fascinating. So many things to unpack there. If we can go back to your earlier years, I'm curious about the moment you moved from Nigeria to the UK at 11 to attend boarding school. That's probably the mother in me, but I listened to another interview that you gave where you talked about that transition, and my heart sank a little for you. It seems like that experience shaped your character in a profound way. And I always joke that no one knows how to toughen up a child like a Nigerian parent. Can you tell us about that experience and what it was like for you?
Sure, yeah. So I think coming to the UK at 11 was definitely a double whammy shock because I was not only transitioning from Nigeria to the UK, so kind of a new place, but I was also transitioning from being a day student to then being a boarder in this new country that I come to, for holiday, but not one that I'd lived in. So no, it was definitely challenging making that transition. I remember, crying to my mum in the loos of the boarding house, saying, I want to come back home. But I think what helped ease that transition, I guess, was I had my brother and my sister with me in the same school, so that was helpful. But those first couple of months were definitely tough. But I loved the experience, and I'm very grateful for my parents for doing that, because I think boarding school, it helps you with just a lot of fundamental skills that you need in life. It helps you with the discipline that comes from the routine that is kind of, I don't want to say imposed, but yes, imposed. It helps you with just being able to network and meet new people from all over the world. We had such an international base of boarding school students. So, pretty much every continent I'm on, I'm sure that I can call someone up that I went to school with. So, those type of things have been really, and it just helps you, discipline, independence, It just helps you take ownership of certain things in your life, and it gives you a really good fundamental training. So even though I didn't like it to begin with, I'm now of the view that I think all my children are going to go to boarding schools. So,
Oh my goodness.
I was in that school from when I was 11 up until when I was 17. And in that school, even though I hated it to begin with, I ended up being the first Black head of school that the company had in its history. So it just gets to tell you that it's really good in shaping your character, and it's really good in just helping you, I think, achieve the best that you can be in an environment that is conducive and one that helps you just be independent and thrive. So I'm a big fan of boarding schools now, even though I didn't like it. But the transition from Nigeria to the UK, where I was the only Black person in my whole class, that also was a transition. But I think again, it's helpful for me now, and it was helpful for me in my career, where at JP Morgan I was the only Black woman, I was the only Black person, and the only woman in my team. So yeah. So I think all these experiences prepare you, and I think it provides a good kind of foundation and a learning experience that is unmatched.
Did you get into banking through a graduate program?
No, so I did internships. So I did an internship in my first year of university, and then I did an internship in my third year of university. And in my third year of university, that's where I did the internship with JP Morgan, and I got the job. So I took a year out. I didn't want to start straight away after being in school for so long. So I took a year out, and in that year out, that's where I decided to work with the private equity fund prior to resuming at JP Morgan full time. So I got my first job in investment banking when I was 18 years old. It's something that I knew that I wanted to do. I was at JP Morgan for just under 4 years. So the years that preceded is what I like to call the dark ages, because I didn't really have much of a life. But it was a great learning experience. I managed to execute a number of transactions, and managed to work with some of the largest companies in the world. So no, M&A is tough, but I think it definitely prepared me for what I'm doing now.
Yeah. And it's interesting because I'm probably about a decade older than you are. And like I said, I come from banking as well. I worked in front office as a sales in Paris and in London. My experience was identical to yours, being the only Black person in the room, often the only female. And I find it quite sad that someone would have had the exact same experience a decade later.
Nothing has changed, yeah.
But, I'm hopeful. I feel like at least now it's, in my days, they weren't even looking at the data, to be honest, I think. But now it's a more open conversation. And so I'm hopeful that it will change for the younger women coming into the industry now. But it's definitely something that is taking a long time to change.
Yeah, no, it's pretty sad that not much has changed. But I think the difference between then and now is that there is a very conscious awareness of the problem.
Yes.
I think, but before, I don't think people were this aware of the glaring, disparities that we have between men and women in banking. So I'm hoping that now that it's so open and out, and people are so open and speaking about the imbalance, that the banks will start taking some measures to address that.
Absolutely. It's time. Now, let's talk about Aruwa Capital, private equity, and women-led businesses. Africa has the highest percentage of women entrepreneurs in the world, and that's something that I took from a piece that you wrote, less than 2% of women can access capital, and there are only a handful of women-owned funds that have successfully closed transaction in Africa. There's this great article by the Harvard Business Review titled, I have it here, The Comprehensive Case for Investing More VC Money in Women-Led Startups. And it's interesting because women-led businesses are the fastest growing segment of entrepreneurship in the US as well. And Black women's business ownership is the fastest growing among all women. And yet women of color rarely receive any VC funding. What does that tell you looking at those two realities?
I think it just tells us that there isn't enough women in decision-making roles, because I think that's that's the correlation that I made, that, we see all these gender gaps in society that you've mentioned. African women are accessing less than 2% of capital. There's a $42 billion gender funding gap between male and female entrepreneurs in Africa. IFC estimate there's a $320 billion credit gap for women in Africa. And I think that it just boils down to the fact that we don't have women in decision-making roles, and we don't have enough women allocating capital. That's really what it boils down to. Because if we're able to get more money into the hands of women, there is just a natural trickle-down effect. Even if you don't have a gender lens mandate like we do, there is just a natural trickle-down effect that due to who you are, you're investing in products and services you understand. Due to who you are and your network, you're going to be investing in women entrepreneurs like yourself. So until we really address the disparity between the number of funds that are run by women, owned by women, have women in investment decision-making roles, so actually on the investment committees, then we're just going to keep on dancing in circles. So there's a lot of lip service right now that's being played by institutions to try and bridge the gap for funding women entrepreneurs in Africa. But until we actually start seeing evidence of investing in female-owned and female-run managers, we're just going to keep on, it's just window dressing. We're not going to be, addressing the real issue. So for me, and that's why, we're so passionate about the work we're doing at Aruwa, is we need to have more Aruwas. We need to have more women allocating capital. And our mission is to make sure that with Aruwa, we can make that business case through the investments that we do and show through our investments that you can make a financial return. This is not charity. You can make a financial return by backing businesses that are, providing essential goods and services to women, backing businesses that are founded or co-founded by women or have gender diverse teams. And because of the strategy, there's also such a seamless intersection between returns and positive social impact. So until we have more women allocating capital and we have the success stories to point to, we're not going to incentivize these large institutional investors and foundations and endowments and pension funds with billions of dollars to start changing and doing something that they've never done before. So that's really where the onus is on practitioners like myself and others that are currently running and owning their funds to make sure that, there is no room for error. We have a lot of women that will follow after us that we need to make sure that we perform for. But yeah, it's a disparity that is shocking, and it's not representative of the population. That women make up 50% of the population, and we're not in decision-making roles that are reflective of that. We're not accessing capital that is reflective of that. So we need more women allocating capital.
Last year, I did an episode that was fully dedicated to private equity in Africa. It was an episode in French. One item that we discussed was that in general, the average size of a PE transaction in the West was much larger than what we see in general in Africa. And that came down to the fact that often in Africa, we're looking at a network of SMEs rather than what we're seeing in the West in general.
Yeah, I think, the African and, generally the African private equity market is still relatively new. To give you a sense, in the last, decade, about $25 billion has been raised in private equity for Africa. In last year alone, globally, there's about 4 trillion of global of private equity globally. So Africa is still it's not even a drop in the ocean of the private equity activity. We still have a long way to go because we're still relatively early in the private equity journey. So we've only been doing private equity for the last 25 years. So when we think about how and also we don't have a lot of companies that can absorb hundreds of millions of dollars. We think that the most activity that's happening in Africa is between $50K to $3 million, if that. But most of the private equity funds in the market are not getting out of bed for less than 5 million or 10 million. So the gap that we've seen and the segment that we're focusing on is we want to invest in businesses that are looking for anywhere between 500K to 2 million. I would say our sweet spot is kind of $1 million. And these are businesses that have done revenues of anywhere between 300K to 500K. They may have positive EBITDA or, be very, very close to EBITDA profitability. But this is really the segment that we think is the most attractive in Africa because it's sufficiently de-risked. These businesses have proven their business model. They're not seed, they're not pre-seed. They're typically, already generating revenue, growing rapidly, have proven the business model, but just need incremental scale-up capital. And you see a lot of businesses in this segment that are looking for, 500K to $2 million of capital and have nowhere to go because, most of the private equity funds want to invest $5 million and up. Unfortunately, the African private equity market today has been supply-led rather than demand-led. And that's something that we're trying to change with our fund.
For the listeners who are not familiar with banking and finance, so seed capital refers to money that's raised by a business in its infancy.
Very early stages. Yeah.
Exactly, very early stages. What's your advice for companies looking to raise capital? And what do you see as the most common mistake?
I think my advice is, if you're looking to raise capital from, VC or private equity, I think one, make sure that you are in a habit of keeping your numbers in check and your accounts in order. Make sure that you have your audited accounts because these are something investors are going to ask for. So just, already having the discipline that if you know that, I'm going to be raising capital from VC or PE in the next 2 years, just be in a habit of keeping your books and accounts in order because that's the first thing that they're going to ask for. Second thing is governance. So making sure that, you have your advisory board or your board of directors, and you just have, a governance structure in place where you're held accountable as a founder for the, direction and strategy of the business, because that's something that investors would expect. And I think the third thing I would say is just making sure that you can see the bigger picture. So already have in your mind, what is the equity that I'm willing to give away in this business? And what type of investor do I want to bring on board? Because I think the main thing of how, investments and businesses that take capital are able to thrive is if there is an alignment of interest with the investor from the beginning. So I think if you already start having those conversations in your business, if you're not a sole founder, and saying, what is the type of investor that we want to bring on board? How much equity are we willing to give away? Start thinking about that early, because I think that, that is something that typically causes conversations to fall down in this part of our world. And then I would say also, fourthly, is making sure that you are ready to institutionalize in some way, and you're ready to, be receptive to some of the ideas that your new partners may have, because it's going to be a long-term marriage. The private equity investment can be anything between 4 to 6 years, sometimes shorter. So it's just being ready to don't look at this investor just as a checkbook, but someone as a partner where you're going to be working together to grow the business, because ultimately everyone will benefit as the pie gets bigger. So yeah, it's just being, keeping an open mind and being ready to partner with an investor that is, going to fundamentally, if they're the right investor, going to help to fundamentally change the course of your business. So, think about, do I own, 10% of a really big pie, or do I own 100% of nothing? So
to make it simple.
Exactly, to make it simple. Those are some of the things that you should be thinking about early. But I think the main thing is just the record keeping and keeping accounts in order. So, when we ask for monthly management accounts and they're not available, that rubs us up the wrong way. It just tells us that you're not ready. So I think just keeping the numbers in check is probably the biggest mistake that we've seen.
Mm-hmm. So you were saying earlier that when women are capital allocators, they naturally invest in women entrepreneurs and also improve the gender imbalance within their investments. What type of sectors does Aruwa traditionally or mainly invest in?
Yeah, so I would say that the thread that runs through our thesis is we want to invest in essential goods and services that the rapidly growing and urbanizing population will need. So whether that's access to healthcare, access to financial services, access to energy, essential fast-moving consumer goods, tech-enabled businesses that cut across all these sectors. That's what excites us. And I think for us, even though we are investing in, because our gender lens criteria is twofold, it's male or female owned businesses that are providing essential goods and services to women, or businesses that are founded or by women, co-founded by women, or have gender diverse teams. So because we're not only investing in women-owned businesses, it's been interesting to see that even though we're not only investing in businesses, women-owned businesses, 60% of our pipeline today are businesses that are co-founded or founded by women. So that's the natural trickle-down effect that I talked about. But we're pretty sector agnostic. I think the main thing is this in line with our gender lens criteria? Is this something that stands up as an investment where we think we can generate very strong, attractive returns? And is it in line with our social impact thesis of job creation as well? Those are the key things that help us decide whether to take an investment forward.
We're seeing some great initiatives coming from the Women in Africa. I saw a fund also that primarily invests in African luxury brands. And typically that's a sector also that's been underfunded and, they all struggle with funding, etc. So I think with initiatives like yours, like theirs, I think this is really great. And I'm sure it's going to have a lasting impact. What would be your advice to young women, looking to move their career to the next level?
I would say that for kind of women that are thinking about, taking their career to the next level, I think the key things, just from my own experience, the key things that really matter are being persistent and being resilient, because it's going to be a very long and challenging journey as a woman in finance or a woman in business. It's a very, very lonely journey sometimes. It's very, very challenging journey. There's going to be a lot of disappointment and rejection. So I think being persistent, being resilient is a key trait. And I think that you can be those things once you understand your purpose and understand why you want to pursue that career, or you want to launch or start this business or grow this business. So I'm very, very driven by a sense of purpose. Just putting it simply, I believe that, God created me to do what I'm doing. So I think having that alignment with purpose helps you face those challenges when they come. So understanding your why and always going back to that why, I think, is important. But also, more importantly, make sure that the why isn't just about you. Because if the why is only about you, you will quit in those hard moments. So seeing how your why can impact other people helps you go further in those moments of disappointment and rejection. So I think that that's just been really it from my experiences, having focus, persistence, resilience, understanding your why, and making sure that your why is bigger than just yourself. That would be my advice. And leverage your networks. Don't be afraid to help, ask for help. Leverage your networks. Get the right sponsors, get the right mentors around you that you can, leverage and tap into for advice. These are all the things that have kind of helped me so far.
I'm introducing this new segment where I ask you to react to a quote or a statement. You own your own business, and the quote is, "You don't have to be reachable." What do you think? Do you have to be reachable all the time? Do you ever turn off? How do you feel about that statement?
Yeah, I have to be reachable. Unfortunately, I'm still learning how to turn off. But when you're in the middle of fundraising, your phone is always on, and you sleep with one eye open just in case. As a business founder, and also as a sole kind of GP and partner in my fund, I have to be always on. Apart from when I'm spending time with my son, because he is priority over all of this. So I think it's important to be on, but also make sure that you make time for family as well. But I think that finding the balance sometimes can be tricky. But yes, you have to be on as a founder, but don't let the business and your objectives take you away from really what's important, which is family.
And what's your vision for Aruwa Capital?
I have big ambitions. I'm hoping that Aruwa can be the KKR for Africa one day, and have billions of dollars under management, where we can point to the dent that we've had in the financial ecosystem, where we no longer have these disparities that we're seeing in access to capital for women. So that's a big vision of mine. Is this doesn't just become a Nigeria, West Africa play, but it's something that people can point to as the example for the African continent in the magic that can happen when African women are capital allocators, and the fundamental shifts in the financial ecosystem that can happen as a result of that. That's the vision, is how do we take Aruwa from, just doing our first fund now to having multiple funds under management across sectors, across different, geographies in Africa, where we have very, very successful case studies of the women entrepreneurs that we've backed, the businesses that we've backed, that have gone on to make, billions of dollars for our investors. That's the aim, because I think if we're able to do that, then other female fund managers after me will not have the same challenges that I've had over the last 6 years trying to raise capital for my fund. So that's the dream. It's not a dream; it's an objective.
How is that for an inspiration and a premiere? A massive thank you to Adesuwa Okunbo-Rhodes for sharing her journey and knowledge of the African private equity landscape with us. The future KKR, you heard it here first. I hope Adesuwa's ambition and determination will inspire many of you. Make sure to follow and subscribe to Entre-Elles, and don't forget to leave us a 5-star rating on Apple Podcasts. See you in 2 weeks for a new episode in French. Bye!